All right, well, welcome back. This is our last video for 2025, and today we're at No Lie in the tap room, getting a little bit of lunch, appetizers, and some veggies.
Yeah, it's a great
So,
spot.
yeah. So we figure in this video we'll do a market update for November, and then we'll just do a 2025, just kind of year in review for real estate in our area, and it's kind of what's happening nationally. So I'll kick off on the real estate side for November stats. We saw our median sale price decline by 2% year over year. We did see our closed sales decline by 3.6% year over year. Kind of not really unexpected getting into like the seasonal last quarter of the year. We did see our new pendings for November increase by 20.5% year over year, which is really good. Active inventory increased 36% year over year. And we saw mortgage rate and mortgage payment both decline by 8.2% respectively year over year. So, I mean, overall, pretty good, I think, end to 2025 from a fundamental standpoint.
Yeah, I think from a mortgage rate standpoint, we started the year much higher than we are today, and it's kind of been a broken record since September. So it's the trading channel for mortgage-backed securities. Therefore, mortgage rates have stayed the same. We're in a pretty stable spot with better rates than we had a year ago.
Yeah. And I think real estate, I'm kind of a simple guy, like Coors Light and football kind of guy. And, like the thing that I love about real estate as an asset is that in my view, it's the simplest supply and demand asset that ever existed. Like it's the easiest thing to figure out. You either have inventory goes up, prices go down, or inventory goes down, prices
Prices go
go
up.
up. I mean, it's pretty simple. And I think if I had one word to describe the 2025 real estate market, it would just be stubborn.
Yeah, I think it has been stubborn and interesting enough that if you use that word and you're looking at interest rates weren't stubborn for the first 9 months, and now they've been stubborn, which actually, from a home buyer standpoint, is a good thing. That way, when you get pre-qualified and you start looking for a house, rates don't change in a 2-week period to a point like they have some of the volatility we had to start the year.
Yeah, and that's a really good point. I mean, we did stabilize in interest rates. I mean, there for a while, it was kind of like riding a wild horse. I mean, one day or 1 minute it'd be up 25 basis points and the next down 25 basis points and kind of hard to make a decision. So,
Yeah, so I think from a shopping standpoint, it's you know as we all enter the Christmas shopping season, it's probably a decent time to start shopping for a house if you are on the sidelines.
yeah. So if we look at 2025 in review, we saw the Federal Reserve cut rates three times by 25 basis points or a quarter of a percent each time, just kind of to be expected. You know, I think the last Fed meeting they said they're kind of uncertain, a little bit hawkish on cutting rates, but really to no one's surprise, ended up getting a 25 basis point cut on the 10th of this month, and had some comments in there where they're gonna start taking some of the mortgage-backed securities profits and roll those into short-term treasury bills, which is you know I mean, I think essentially the start of quantitative easing in my opinion, but
Yeah,
again, I'm Coors Light and football,
yeah, no,
simple
I
guy.
think you're right. I think it's a way to start to lower term borrowing for the federal government, which is believe it or not, the Federal Reserve Bank's been under some pressure by the administration to do that, and this is a way to do that.
Yeah. I think the one interesting thing, just to kind of wrap up on the Federal Reserve, is there were three or four governors I think that descended, and so one of them, which is Trump's appointment, wanted to do a 50-point basis cut. No surprise to be a little bit more aggressive there. And then you had two or three that they felt that rates should stay where they were, no change. And right now we're back at 3.5 to 3.75 for the Federal Reserve funds rate, which is a neutral stance, and we talked about that in our last video.
Yeah, I think we are kind of at a neutral rate, and I think that one of the reasons rates have been pretty stable is really with all this going on, inflation has been fairly stable for the last 3 months. I mean, it's basically at 2.4% a year, month over month, and it's been that way, for the last 3 or 4 months, which I think is why the Federal Reserve Bank was able to cut rates three times.
Yeah, yeah, and I think they're making a decision of, do we focus on inflation or do we focus on stabilizing the economy because jobs numbers aren't that great? And I think that well, I don't think, I mean, if you just read into it, they're making the decision to support jobs growth
Correct. Yeah.
and a healthier, more robust economy. So for the year, starting January through really first part of December, I guess, is kind of where I'm pulling data from. we saw housing appreciate at about 1.5%. We saw closed sales up 2.9%, and mortgage rates came down 10% year to date. We started the year around 7%. And we're sitting right at like 6.2, 6.25. So, from that perspective, I mean, for everyone that's kind of waiting for this crash in real estate, I think take a step back and ask yourself, like, what's going to lead to the crash in real estate? I mean, if it's a simple supply and demand deal, we've seen inventory up, we've seen price stability, and we've seen mortgage rates come down. Barring anything that's like, a catastrophe, I think this is what we're going to see in 2026.
I mean, if you're talking about supply and demand, I mean, depending on who you talk to, we still may not have enough houses and housing units to meet the demand for people need to live. That is going to keep housing prices up
Well, and with
or keep them stable.
yeah, and with mortgage rates coming down, and if that trend continues for a buyer, now the question is, do I go and rent? And rent hasn't really like receded that much, so if I'm 23, $2,400 a month in rent, and I can go and get in and own my own home for relatively the same amount of money with zero out of pocket options, with low down payment options or your normal down payment options. I think that's the question in 26 is the trade-off between renting and buying, because now they're starting to be about the same, rent versus buy.
Well, I think from just a emotional standpoint, when you rent, you can't paint the walls. You don't get to decide what the carpet colors are. You usually don't have your own backyard. Some of these things, like if you want to make changes to house, which a lot of people like to do, probably can't, and if you're in an apartment, you probably can't have people over till midnight. I mean, it's your house, it's your rules. So, I mean, there are some things that are even advantages that when there are equal, actually make owning a way better deal.
Yeah. Yeah, and I think, I mean, we always preach, don't try and time the market, it's time in the market. If you're looking at making a decision and you look at 2026 and, all of the stars kind of aligning, inventory continue to increase, meaning more choice for you. If we look at sales nationally, we're going to finish up around 4 million homes transacted for the year of 2026, which sounds like a lot, but our average is 5.2, 5.5 actually, I think. So we're 30-40% off of just the average of what we see in a normal real estate environment nationwide. And then add on to that mortgage rates, I think will continue to trend down, but not to this extreme unless we see government intervention. And I do think that that is likely in May, June. You already have a governor appointed by the current administration. You're going to have a new Federal Reserve chairman appointed by the new administration. All things point to more of a easy money kind of environment with lower rates.
Correct. But I mean, I think as we've talked, that we're not expecting rates to drop another full point. We're talking rates maybe a quarter point and slowly move. They're
Yeah.
not going to, they're not going to move quickly, and they're not going to go. This whole idea of 3% again is not coming in.
Yeah, I mean, it's a slow moving freight train. It's not a race car, in our real estate market anymore. So if you're sitting on the sidelines, or you have a life event that's coming up, like that's generally what the move's going to be. Why somebody's going to make the move. I think things will get it more affordable, but I wouldn't be trying to time an event. I
No,
think it's
I
just
don't
going to
think
be a
you time rates
boring.
and time the price of a house. You may be sitting here. We may be doing a video in July, and rates could be exactly the same, and house prices could be stable or up 1% or
Yeah,
2%. Right. So,
yeah,
you spent the last 6 months renting.
yep, absolutely. Well, we appreciate you guys tuning in. Again, we're at No Lie in the tap room. Hope you guys have a Merry Christmas and a Happy New Year, and we'll see you in 26. If you are looking to buy, sell, or invest or develop with anything real estate related, we can be reached at 509-990-SOLD or SpokaneHomeGuy.com.
And if you have any lending questions, but if you're investing or buying your primary residence, we can be reached at 509-747-1300 or chimneyrockmortgage.com.
Awesome.